Hi everyone, and welcome to today's morning report on Tuesday the 3rd of March with me, Rich Perry, market analyst at Handtech Markets. Once again, European trading sessions got off to a slightly positive start. That's basically been helped by the gains that we saw on Wall Street yesterday into new high ground. You saw a closing high at all-time levels for the S&P 500, up 0.6%. Also, the NASDAQ back above 5,000. Interestingly enough, for the first time since March 2000. So very interesting moves there on the NASDAQ and also Wall Street, and that's helped to push these European stocks higher. Interestingly enough, though, Asian markets were a little bit tentative overnight. The Nikkei, for example, basically flat on the day, not too much movement there, and I think it's sort of been held back also by the fact that the Reserve Bank of Australia decided to not cut interest rates last night, overnight. And that was a bit of a surprise. That was unexpected. The market had been factoring in a 25 basis point cut by the RBA, but it didn't get one. Although I think certainly this statement suggested that they were still contemplating further rate cuts down the line. So any sort of strength that we get in the Aussie may well be short-lived, but I'll talk about that in a little bit as well. But certainly it looks like Aussie stocks were down, and as I said, yeah, the Aussie dollar is the best performing major currency today, up 0.8% against the dollar at the moment, and that's helping to drag the Kiwi higher as well. But to be honest, across the board, pretty much other than that, the dollar is holding rather firm at the moment. What we're seeing is this dollar index, which is still looking as though it's trying to break out above that key January high and continue this move higher that we've seen over the past 6 or 8 months now. We're into this dollar rally, so it still looks as though the dollar is trying to maneuver itself for an upside break. A little bit cautious on the euro today. The euro actually started to move higher on the back of strong German retail sales, but it's come back since then, and the pound and euro basically flat on the day. And it certainly looks like these two are consolidating. In terms of equity markets, as I said, the Wall Street markets continue to push higher, and that is being accompanied by the VIX volatility, which continues to fall away, now back at 13. So that's coming back towards 3-month lows there on the VIX. And again, it looks like that is supportive of equity markets positivity anyway at the moment. And that takes me on to today's data, which is not a great deal actually. We've had, as I said, that RBA rates decision overnight, which has caused a bit of a stir. But other than that, we've got not a really great deal. We've got the UK construction PMI at 930, and that sort of only accounts for around about 6 or 7% of the UK economy, so not too much of an impact, but it does slightly have an impact on sterling, and that's expected to basically come in at 59.0, so pretty much flat on last month. So I can't imagine this number's going to make too much of a difference to sterling today. Then into the afternoon, we've got the Canadian GDP, and the expectation there is for a 2% annualized growth figure on the GDP. So my chart of the day is silver, actually. Now I'm interested in silver because we've had this move on gold that's sort of rallied back towards the downtrend that we've had since that January high, and similar sort of story we've seen on silver as well. We've seen this sort of minor rally over the last few days, but again this downtrend is coming in and acting as the basis of resistance, and it's very interesting that that is coming around this 16.60 level, which is a key pivot level on this chart. Formed the support back in October, then became resistance November, resistance again in late December and early Jan, broke above it to become a little bit of support again, and support again through February. Now you've broken back below 1660, that's becoming resistance again. So interesting, this is a very important pivot level near in the medium term, and it certainly looks to be doing that job again. And this is the move that we saw overnight, the sharp sell-off, but actually that sell-off bang on 1604, and that 1604 was the was to the pip the low that we saw on the 23rd of Feb on Monday last week. So very strong decline, but found support. But the thing is now, it's now rallied back towards that 1660 resistance, which is that pivot level throughout this chart. And it certainly looks like it's just been coming off again, so it just looks like it's a chance to sell. These momentum indicators are pretty much across the board are negative. RSI finding resistance under 60, MACD lines negative, and stochastics rolling over as well. So it looks like that the momentum has been lost in this rebound, and it looks like it's a chance to sell. That sell point coming in at the confluence of this 1660 pivot level and also that downtrend as well. So lots of reasons why it looks like this is a selling opportunity on silver, this rally. And momentum indicators are relatively bearish, I'd say. They're not extremely bearish, but you would argue that perhaps the RSI has sort of further downside potential, as do the stochastics as well. A sort of negative configuration there, but nothing too bad on the momentum. But certainly it looks like having found that resistance at 1660 again, I think we're going to be retesting the lows at around that $16 level, and then back towards these lows around 1550 could well come under pressure as well, certainly if this downtrend continues. In terms of where we're looking at for the breakdown of this bearish outlook, you'd be looking out for this reaction high up at 1688 as your sort of confirmation level that we're starting to break that sequence of lower highs and lower lows. So 1688 is the point at which you're looking for potential stop losses, I think. Anyway, I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.